To Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable where we talk about current market conditions and any questions you might have about your subscription, what strategies work, what do not, and what to expect short-term and long-term in the market. This is my brief bio. If this is your first live event, do me a favor, type in first. I always want to welcome new subscribers. Everybody else, thank you very much for coming back. Really appreciate your time commitment. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 20 years, mentoring, teaching subscribers, come from family of teachers. I taught myself computer science courses. And finally, I have a master's degree in computer science, specializing in artificial intelligence, statistics, neural networks. And that's what the Tradespoon technologies build upon. Disclosures are very important. I'm going to go through specific trade ideas, trade setups, so please look at the disclosures. If you're new to trading stock and options or options, I encourage you to visit optionscreening.com to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. It should not be assumed that the future trade picks will be profitable or will equal past performance. All right, before we get into a trading plan, let's talk about current market conditions for the week. We do have an expiration, the rebalancing on Monday, so that creates more instability, or not stability, but volatility. So regional banks and banks announced earnings. We have pretty strong rebound in carry. It is rolling over today, but still continues to trade higher. Small cap stocks, strong move to the upside, retesting year-to-date high, retesting July, August high. So we do have a broadening of the rally when it comes to investment banking, Morgan Stanley's of the world or BlackRock Group, regional banks, small cap stocks. And we do have kind of a reversal maybe in some of the AI stocks. Right? Microsoft had a clean breakout on an announcement of AI that they will charge, double their monthly subscriptions for enterprise Office 365 users. Stock had a significant rally and rolled over. TSM, Taiwan Semiconductor, announced earnings, rolled over, and their main message was basically, and somebody put it very eloquently, which I like, Taiwan Semiconductors, one of the biggest semiconductor, kind of a proxy for global chip demand and global economy, basically said AI is great, but it, maybe only 5% of our business, which will grow, but the 95% of our business, cell phones, computer, chips for computers, the demand is slowing down and the AI is not offsetting, right? So you have a steep sell-off, 10% sell-off in Taiwan Semiconductors and ASML, I think. And a lot of other semiconductors follow along. So then the question becomes, what about the other top 7, right? What about Microsoft? What about Apple? What about Nvidia of the world? So we'll know that question till next week, right? So far, stock like Nvidia, upward momentum is intact. It hasn't broken any. It posted in the red candlestick for the week, but nothing out of ordinary. Bullish uptrend is intact. You look at the Palantir, similar to Microsoft, broke out on the news and now rolling over, pulling back. And stocks like AI are kind of not going anywhere. So the question is, is this isolated to TSM and ASML? And if it's not isolated to TSM and ASML and earnings like Netflix, right? We have Netflix this week. Decent earnings. maybe missed slightly on the revenue, but record number of subscribers and everything looks great, but you have a sharp pullback, right? Again, 52-week high and then rolling over. And similar setup is in Tesla. And buyers are not stepping in, right? Usually when these stocks roll over, you have buyers step in almost immediately, right? So far, bulls are not stepping in. So the question for the next week, what about Microsoft, Google, and Amazon, right? And Meta, does that impact them, right? You look at the earnings of IPG, kind of a vertical move to the downside, right? These are the largest advertising companies for Fortune 500, S&P 500, Fortune 500 companies, right? Vertical moves, an Omnicom group, vertical moves to the downside in IPG. What does that mean? Global economy is slowing down. Companies are spending a lot less money on digital and traditional media. And after vertical move to the upside, you have vertical move to the downside. So next week we have Google, right? Kind of undid last week rally, and we have Apple. Still very strong, intact bull trend. It did make new 52-week high, but now kind of pulling back and trading below the 52-week high. Not 52, all-time high, below all-time high, but still intact uptrend. So that's the question. If the technology is going to roll over, will it be picked up by healthcare, right? Healthcare was one of the trade ideas this week. You have a vertical move to the upside in healthcare. You have more vertical move to the upside in consumer staples, and vertical move to the upside in utilities. Right, so utilities rally, consumer staples, defense sector rallying. We have pretty strong move in small caps and carry. So the question is, kind of been the question for the past 2 years, is it just a healthy natural rotation into cyclical names where maybe second half of the year cyclical names and defense sectors will outperform and technology underperform? Or does the entire market rolls over? Bob likes to ask me, at what point do you switch from bull to bear? And I did say that, a lot of it depends on the dollar. Dollar had a vertical move to the downside, broke to the support level. Now it's recovered half of its losses. We have ECB decision and Fed decision next week, right? So perception of interest rate hikes in Europe versus United States, that carry trade will impact the dollar. Probably it can move only in two directions. It's either going to retest the lows or maybe even break, or it will undo all the losses and start resuming its kind of, well, at least sideways market, at least sideways rally. So that, I think, will dictate whether we will have healthy rotation into the value stocks and cyclicals, or we just, the market is going to probably roll over. So very important question for next week. We'll probably know the answer by next Friday, or at least, Monday, Tuesday after the next week. So that's the question, right? If we have healthy rotation, even if technology pulls back, bulls at some point will step in. They will relocate to cyclical names, and we are retesting all-time highs. Right, next couple months, maybe by October, we are at 480. All right, so plus 30 points. We're at 450, plus 30 points. Right, that's one scenario. Right, we either technology leads or technology rotates into cyclicals, but we're continuing broadening of the rally, and spiders continue to go on higher. Maybe QQQ underperforms, right? And no signs of recession. No signs of recession. Unemployment is great. Earnings, are also so far, I guess, are okay, but only 10% of the companies. Right now, mixed results, right? If the companies were oversold, like investment banking or banks or regional banks, then they rally. But if the stocks were overbought, like technology, like Netflix and Tesla, then they got sold off. So first scenario, plus 30 points. Second scenario, minus 30 points, right? We're going back to, probably breakthrough August high. This is the confirmed breakout of this channel, and then we're back to the channel, right? We're back trading in the channel. So plus 30 points, minus 30 points. Do we go to 420 or do we go to 480? Those are the two scenarios for the next couple months. Probably by end of next week or week after, we'll know more. But as an investor or long-term or a trader, whether you invest in long-term and you're chasing the rally, you think we're gonna break through this overhead resistance and make new highs, right? And a lot of portfolio managers have been underperforming, right, the market. So you do have that fear of missing out and catch-up trade. That's scenario number one. Or scenario number two, we do pull back minus 30 points. So how many of you say one? How many of you say two? Done. All good. Andre, Ann, Bob, Don, Hussein, Judy, Martin, Michael, Perry, Peter, Ray, Thomas, Tim, Mark, Martin, Y, Jamie, Steve. All right. You have half ones, half twos. All right. Okay, so we're divided. Half of the people said one, half the people said two. It makes sense, right? For every bull argument, there's a bear argument. For every bear argument, there's a bull market. We're divided, you know. I think on CNBC poll, you know, probably 80% answered one and only 20% two. A lot of you guys go to my live trading room, so you know that I've been bearish on the market. So I continue to say two, even though a lot of people ask me, why do you keep saying two if, you know, since March, it's just kind of vertical move up. And when do I change my mind? I think next 2 weeks, this is where I would, you know, kind of a gut check. I would have to make a decision, right? And I think mostly it's going to be on the earnings season, right? But to bigger extent, it's going to be on the dollar, right? If dollar pulls back, that means worst case scenario, we just rotate into cyclical names. And, you know, JP Morgans of the world is just going to continue. They will lead the rally, right? It'll be JP Morgans of the world doing the catch-up trade, maybe Caterpillar, right? That will continue to grind higher, right? So industrials, your banks, you know, energy has been underperforming. Maybe XLE will catch a bit and start outperforming also, right? We have a pretty sharp move in XLE as well this week. So meanwhile, you know, so we did talk about next week, right? Next week, FOMC, ECB decision, that's probably the most important data. And then the big seven, right? Your trillion-dollar companies will continue to announce earnings. Next week, we'll know whether, you know, generative AI is enough to substantiate the current valuations in the rally, or it's small percentage of their business, you know, kind of like TSM, and, you know, they're gonna roll over. Meanwhile, how do you trade? So let's look at recent trades. What do we do at Tradespoon? Let's look at last 7 days. So it's a combination of both option and stock trades, right? Very commonly people say, Vlad, you only trade options, but I'm a stock trader, or you only trade stock and I'm an option trader. I trade both. I try to give example of both, right? So one, we're in the middle of the earnings season. So Blackstone Group, Capital One Financial, these are the companies that announce earnings, right? So I'm trying to collect premium by selling out of the money put spread and call spreads, right? So like Blackstone Group, I was able to sell on a $100 stock, 45 cents. So 0.5% gain. Capital One Financial, I didn't do the puts because I thought the risk was more to the downside, but if I did both, same thing, it would be 40 cents. I didn't do the puts, I was a little bit concerned. You know, actually AXP, I was right. AXP did have a meaningful sell-off, 5%, but Capital One is actually did okay. Sorry, not COF. Thompson, COF, right? Right, Capital One Financial is neutral. So selling premium, selling put spread and call spread, taking advantage of expanded volatility. There's earnings every week. So every week, so, you know, right now there's a lot more earnings, so I do it more often. You know, sometimes I do it less often, but you know, each trade, if I can make 0.5%, even one contract, you know, if I can make $50, right, or $75, but they have the idea of compounding investment. Compounding investment, if I can make 0.5% overnight, and even if I make 1% a week, that compounds, right? And that's the goal. The goal is to have a journal, document your rules in a journal. Risk management, right? You always need to know, you know, on a $10,000 account, I try to do $100 stocks. You know, if it's UNH, I would not do one contract, because one contract of UNH, that's $51,000, right? And most average account is $10,000. I think you're taking too much risk. And it doesn't matter if you're buying out of the money call or you're buying call spread. You should always try to treat options as stock derivatives, right? And think of the cash secured put or call, right? You need to have enough cash if you get assigned to cover, you know, the trade, and always look at not risking more than 4 positions at a time. 4 positions at 2.5%. So these are examples of earnings strategy. XLV, right? I was bullish on XLV in the beginning of the week. I bought a spread and now closed it, right? XLV had a pretty strong move to the upside. Same thing with UNH. So sometimes I trade options, sometimes I trade stock, right? Like Bank of New York. Right, bought at 30.47, sold at 30.48. That's part of the earnings strategy, and part of stock trading, just UNH. Sometimes I do spread. So those, I'm trying to every week to do an example of each, right? One example of the stock, one example of earnings, one example of option spread. I mean, and you have to decide, you know, some people only like to trade options, some people only try to do stocks, some people do both. Right, but that's part of the elite circle. So I encourage you to try it out. You can use SMS alerts to get text messages every time I trade, but more importantly, try to participate in the live trading room. So every trade, it's not just enough to get an SMS message, that's the first step, but then you have to figure out the risk management, how many shares to buy. And that's where I always go over, you know, sometimes, you know, very repetitive and maybe boring, but repetition is extremely important. So participate in morning bell, closing bell. If you're busy or you have other commitments, please watch the recordings, right? You can skip forward, you know, but I encourage you to do that, especially if you're new to trading stock and options, right? Usually people ask me questions, Vlad, you know, do I close my position? Do I open my position? Do I split it into 2? You know, what about slippage? If you're asking these questions, you probably don't have a solid trading plan, right? The idea of, you know, behind Tradespoon is to generate signals that you can follow, or sometimes to give you hand holding so you know exactly what I'm doing, right? When I'm entering, when I'm exit. But, you know, I cannot manage your money, right? First of all, I'm not a money manager. Second of all, you know, I manage my own money and I'm just giving you exposure. So you have to decide position size, right, and number of shares to buy, right? And that the only way I can help you determine that if you participate in a live trading room, right? If you participate in live trading room, ask questions, or if you watch the recordings, right? So very important to watch the recordings, participate live trading room. If you don't have written down trading plan and you don't have a written down journal, I would say that's almost a requirement, right? It will be very hard if you don't do that to be successful over a long period of time. I mean, obviously, if you have a trading plan, you traded long enough, you just need signals. Well, that's a different story, right? So, and we have half of the subscribers that don't care about Vlad. You know, does he buy? You know, 50% of the, you know, half a position does. You know, they have their own well-defined trading plan. Some of them kept the XLV spread, some of them closed. But if you need more of a hand holding, then the only thing I ask in return, please watch the recordings or participate live in the trading room. That will answer majority of your questions, or strategy roundtable like you guys are. But some of you are watching the recordings. So any questions on the Elite Circle type of trades we do, what the Elite service offers you? I mean, if you just want to follow my trades, Shadow Trader is another alternative. Elite Trader gives you access to all the tools and all the picks. Shadow just might trade ideas. We have just the stock portfolio, that's Robo Investor, or just the spread portfolio, that's spread and premium. Or we have tools, right? You see me very often use Stock Forecast Toolbox. Great tool, right? Even though we have volatility today in the earnings model, basically says at 455 consider selling. If we reach 450, consider going long, right? So right now we're at session low 452. We're as low as 452.20. At 450, if you're an aggressive short-term trader, you know that that's the support. So this is where you might want to start thinking about buying, right? We pulled back to 450, right? It's 451.49 today. So that's the kind of the line in the sand, then potentially go long, right? If you're short-term aggressive trader because you think we're going to retest the highs, right? As earnings season unfolds. Then, the support after that, if 451 is broken, it opens the door to, the gap, right? Somewhere around 447, right? 444, 447 is your next level of support. So those are the two supports that if I'm a bull, I would be watching, right? Right, so the gap, right? That's your support number 2. And then yesterday's week low. This week low or yesterday's low. Sorry, yesterday's low. Not this week low. Yesterday's low around 452. So those are your two supports that you want to watch as a market. All right, any questions? It depends on earnings. Tim, 1.5, that's market neutral. Okay, I'll take 1.5. Asama, good morning. How are you? All right. Meanwhile, value is slightly higher, spiders slightly higher, technology is slightly lower. So kind of market is looking for direction, right? Market is looking for direction. I would look at KRE today. A lot of regional banks announced earnings, and I thought they were actually great earnings. But KRE is rolling over, right? So same thing. Yesterday, Zion had earnings. I don't think there was anything spectacular about Zion, and it rallied, 10%, right? It's down 5% today. Today, Comerica, I think, had better earnings than Zion, and it did rally about 7% pre-market, and now it's down, 4%. So you do have this reversal, irrelevant what the earnings are, right? Right now, if you have anything negative to say, right, like Tesla, like I don't know what the negative means, because margins I think were actually fine, but Elon Musk came out and he said, well, I'm concerned about the economy, we might lower the prices of vehicles again, and just it just fell apart. So earnings do not matter. If you say something negative, you will get punished, like IPG today, right? Or CSX. Right, pretty sharp pullback in some of these names. Or if you're oversold, right? If the stock is oversold and you deliver decent earnings, even if you still have some negative to say, but all you have to say that I think the worst is over. As soon as the CEO says I think the worst is over and the stock is oversold and can do a catch up, right? You have vertical rallying. So that's kind of been the reactions. If I have to sum it up, for the 10 to 15% of the companies that reported this week. Next week, we'll get to almost half of the companies reporting earnings, and the main ones, right, like Microsoft, Apple, and Amazon. All right. Any questions so far? All right. Okay. Sorry. Any questions I can answer? Okay. So that's stock forecast toolbox, right? It gives you support resistance for 10 days. You can zoom in or zoom out, 1 hour or 6 months. 6 months, it basically says 450 is your overhead resistance. We are trading exactly at that level. I mean, this is the AI model. It trains, learns. It doesn't look at new information like generative AI or earnings, but you know at 450 probably market is overbought. Can it get to 460? Sure. You know, if Microsoft and Apple hits a home run next week, and you know that sounds dovish, and ECB sounds hawkish, well, we're going to get to 460 very quickly. So you still, bull trend is still intact, right? So we can get to 460, we can get to 465. That's totally possible, but it is overbought, right? It is overbought, and you know, Microsoft and you know Google and Amazon have to do, you know, hit a home run. So there cannot be anything negative on those earnings call, right? At least based on, you know, Tesla and Netflix earnings and TSM. But if it drops to 426, right, and you still the bull, and you think there's no signs of recession and we can avoid, you know, soft landing, great. Then that's your buy signal, right? Closer to 430, you're buying. 450, I mean, a little bit overbought. So that's stock forecast toolbox. It helps you determine support resistance. And again, even if you look for 10 days, I encourage you, when you enter long or short position, whether you're doing day trading or long-term trading, right now it's, you know, 1% difference between bid and ask, predicted bid and ask that gets posted the day before. So if you consistently buying at 450 at the predicted high, right, estimated high, and if you consistently selling at estimated low, you're probably underperforming, right? So I would rewire your thinking and just try to follow along. Like if you want to enter a trade today, you're long, you think market continues to rally, okay, 450, 451, that's a good entry point. If we're at 455, 456, you're probably overpaying. And if you can save even 0.5% on every entry and 0.5% on every exit, that will be it will make a huge difference in your performance every month or every year. So that's why I love this tool, and I encourage you to use it. We do have different signals, right? If you have solid trading plan, if you confident trader, if you keep a written journal, okay, active trader. I love it. Sometimes I do a lot of trades based on this. You have CMS, Dove, and Pepsi, right? These are the leaders of the market right now, short term, right? You look at CMS, utilities, strong rally, right? And model sees that, I mean, it's been outperforming, and probably outperformance is going to continue, right? So this was posted yesterday. CMS is up 107%. Dove, this was posted yesterday, you know, up today, right? So the model is doing a good job identifying stocks that are in uptrend, right? I'll give you specific entry and exit points. Specific entry and exit points. I encourage you to divide the entry into two, right? On short-term trading, don't risk more than 1%. On longer term, don't risk more than 2%. And again, the most important is this rule, right? 4 positions at a time, and maximum loss, not to exceed maximum loss of 2.5%, right? So if you could get one kind of takeaway from today's presentation is that, you know, if you don't have a written down trading plan, you don't have a journal, I propose you don't have more than 4 positions, and you don't risk more than 2.5%. That is number one goal. There are a lot of signals, as you can see. You're never going to be short on signals, but figuring out which signals and figuring out how many shares or contracts you can buy. Well, that's a very important skill. And even after 25 years of trading, I still make mistakes. So it's gonna, it involves emotional intelligence, it involves being self-aware, it involves experience, but this is something you wanna kind of set as the goal, right? It's the risk management, right? Figuring out the next, Tesla or the next Rivian or the next, I don't know, AI. You can go on the internet and find millions of ideas, right? But make sure that you size it accordingly. When the trade goes against you, you're gonna properly manage it. Well, that takes a lot of experience. All right. Any other questions? 10:04, been 35 minutes. Let's see what else I want to talk about. We talked about active trader, weekly traders, same thing. It's based on AI models, but more of a longer term signals, right? Like UNH. Right, Monday posted UNH, provides you suggested entry point, and obviously, it made a huge rally. So same thing. Here, you notice the difference is a little bit wider, right? Instead of 1%, the difference is 2%, 2.5%. So that's the weekly trader, right? You can do trade or you can do options, right? Same thing, UNH. Most people should not trade UNH options, but if you're an experienced trader, you want to put on a spread, let's say, or you know what you're doing, you have a good risk management, okay, you can trade, do a substitution, and if you can afford 100 shares of UNH, then you can afford one contract of calls. If your account doesn't allow you due to size or experience to have 100 shares, then then you do stock and you buy maybe 10 shares, depending on your position size. So that's weekly trader, and same idea with monthly trader. So we talked about pick services with different entry and exit. We talked about different portfolios you can follow. We do have a YouTube channel. I encourage you to participate on YouTube. If you've never been in live trading room, just click on subscribe. If you haven't done that, I would greatly appreciate if you click on subscribe. Next one is Wednesday, morning bell and closing bell. We have a great community. We have great experienced traders. We have new traders, excellent questions. There are no bad questions, kind of judgment-free zone, safe zone. So I encourage you not to trade alone and become part of the Tradespoon community, where you can ask questions. Some of you, I know, half of you are in the live trading room, so I know your names now by heart, and I appreciate your commitment. Some of you are new, so please consider joining our community. Any other questions? Meanwhile, I still think, at least, I've been a couple months off on timing. I thought the pullback is going to be end of May or May. We haven't had a pullback yet. But I still think that the most important, are interest rates, right? Right now, TLT is up, QQQ and semis are up. Yesterday, TLT was down and semiconductors down. I don't think that correlation is going to stay beyond next 2 weeks. So either TLT is going to rally and market is going to pull back, right? TLT is retesting 50-day moving average, 200-day moving average, right? And you have drop in rates, still inverted yield, which is negative for the market, right? When 10-year yield drops, that's considered to be unusual bull market. In a normal bull market, 10 years should go up and 2 years should go down, not the reverse, right? That's considered to be, at least by bond, expert vigilantes, that this is not a normal correlation. So if 10-year drops, if TLT continues to go higher, yield continues going lower, I think that's bad for the market will sell off. So I would keep an eye on the yield. This week, TLT it retested year-to-date low and had a pretty sharp rally, retesting 103, retesting this trend, right? I would say this line is the line between bulls and bears. As long as we're below this line, equity bulls are in control. If we jump above this line, let's say by end of next week or the following week, well, I think, the bears will take over. And let's see, did we break this trend line? I didn't look. Kind of, right? So kind of. So jump above, jump below. We gotta get above 200-day moving average and above this line, right? But as long as we're below this line, bulls are still in control. Equity bulls are still in control. And I would look at dollar, right? If we next week, if we jump and trade above 102, again, I think market will roll over. If we drop back to 100, market will rally. All right, any other questions? And will TLT go up? Well, if you said 2, if you answered 2, then you believe TLT is going to go up. If you answered 1, these major asset classes that are highly correlated. So I cannot imagine TLT continue going higher and QQQ continue going higher. So if you said that equity is going to pull back, that means you believe TLT is going to go up. If you think equity is going to continue going up, that means TLT has to roll over. I still think, well, everybody who was bullish on a bond were wrong, which majority of the people, I think 9 out of 10 people, if you ask them in December, said this will be the year of bond market. 9 out of 10 people were wrong, right? But, just because you're wrong first 6 months, that doesn't mean you're wrong the next 6 months. So I still think, bonds will outperform equity. It's just, I thought it's going to be in the first half. I was wrong. Okay, I think it's going to be in the second half. But a lot of it, again, will depend on this ECB and ECB. The reason, a lot of these, well, one, there's no signs of recession, but the other one is that Europe continues to have inflation issues, and they are aggressively raising interest rates, where inflation significantly has dropped in the United States, and the perception that Fed is going to pause. If that rolls over and that perception changes, I think that would be negative for the market. Meaning that, Europe and Britain, like Britain announced CPI, I think this week, and it dropped significantly, right? And a lot of already people say, well, maybe we don't need to be so aggressive on raising interest rates because Europe is already in kind of recession, right? Global economy is slowing down. So if that's the case and they're going to be more dovish, and Jerome Powell comes out next week and say, no, 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 we still need to fight the inflation, then I think dollar will rally and the pullback will accelerate. Or will start, not accelerate, will start, pullback will start. All right, any other questions? Meanwhile, market is looking for direction. QQQ is slightly higher, small cap slightly lower, spiders slightly higher, and value slightly higher. So not a lot of price action. Okay, any questions? Stick around for a couple minutes, answer questions. If not, we do have a closing bell today. Please participate in YouTube. Give us a chance to look at the live training room, get familiar with the trading style approach, that's all I have for today. I'll stick around for a couple of minutes just to make sure you don't have any questions on your subscription, or if you're looking for subscription. All right, any questions? MSM. So thank you, Osama. All right, guys, there doesn't seem like there are any questions. Okay, thank you very much. Appreciate your time. Please consider joining Elite Circle, or at least join us on YouTube and click on subscribe. Click on like if you like the content, and I will see you the closing bell or Monday morning. Thank you.